Thank you for watching the Conquer the Mummy channel. My name is Grady Garrett. I'm the Chief Trading Strategist for ConquerTheMummy.com. All right, let's take a look at the markets. First thing, are the immediate signals in sync? So I always show a focus chart of approximately 2 months. And so let's just kind of take a look at that and make sure our systems are in sync with the S&P 500. So I see the off the chart signal. The last one was a bull trend on 331. Then we were briefly out about a week, starting 420. Now we didn't go short. We actually just went to cash with that signal, a flat trend signal. And then we picked up the signal again, bullish on 427. So we were only out, so to speak, flat signal for about a week. After that, we continued on. And we were not almost taken out by the day the bears tried to tank the market. That's 513, and then we were in position to enjoy the breakout, which is 526, and move forward with that. So, are we in sync with the market over the past 2 months? Absolutely. Let's take a look at our current signal. So our last signal was a 427 bull trend signal. Again, I'm going to put just a quick dot above the just to focus above that trend line. So if you look at that trend line, you see that it's basically a small downward trend line, slightly downward. There was a attempt on 513 to sell the market off, but it didn't seem to have much teeth, or at least not a longevity. So the market bounced back with that, and then we were in position to take advantage of 526 when the market moved up and broke through that. So the current signal also, our current now in the past I've had a past projection and a current projection. Well, the past projection was 3100. Well, we hit that. So the current projection is 3775. It's off the charts, even off the above the previous highs before the COVID event. So my systems are pretty bullish right now. Does technical analysis kind of support what's going on this today? So let's look at that on the trend line. So the only really negative trend line that we have is that one I've got the green circle over. And that, if you draw that from 420, the close of 429 to the close of 511, you kind of have that downward trend. You have that sell off on 513, and that reversal, and then it kind of hit that kind of a plateau for about a week, and then it just broke out. So the other thing I would draw your attention to concerning this question: does technical analysis support this higher price kind of forecast? If you look at the 22-day moving average chosen because there's about 22 trading days in a month, you can see that has a positive rate of change, moving higher, moving higher. So all that seems about right. Technical analysis does support higher prices. All right, let's look at kind of the fundamental backdrop. And again, I want to draw your attention to the day on 513. I'm calling it the day the bears tried to tank the market. So let's talk about that briefly. Let's see, just 1 second. All right, so on that day, that was the day Fed Chairman Powell came out, and he was quite dour, I would say, and did not have much of a much positive to say about the market, at least certainly not in the short term. He did put an obligatory comment that things will work out over the long term, and it seemed like it was more something he was required to do as opposed to something that he wanted to do. It seemed obligatory, did not seem particularly. I'm going to draw a green dot here just to show you the day I'm talking about. It's next to that red cross there. So that brought the markets down. His dire comments brought the market down. and then they started to rally, and they got about up to about the previous day's close. But then CNBC trotted out David Tepper, a very iconic hedge fund manager, and Tepper made the case that the stocks were the second most overvalued, and the one above it, or most more overvalued, was the 1999 market high. So he had very negative comments. He repeated them twice, in case I guess someone was hard of hearing and they needed Tepper to repeat that. So after he had said his comments based on his fairly good reputation, the market began to sell off. Now, having sold off towards the end of the day, there was some selling the next day, but it wasn't able to hold it. The weak spot for the bears in this time frame was simply that the media had basically scared everyone out that they could. So it just didn't seem like there was a lot more people to start selling. So there was a limited range, limited selling power available. So after that, the market closed higher that next day, and it closed higher more, and then it started to kind of level off along that trend line again. I'll just put a dot there. Around here, you can see that the market leveled off a little bit, and it's like it was trying to go above Tepper's overvaluation, but then not really. It was back and forth, back and forth. But again, there just wasn't any selling power. So as time went on the 26th, it just broke out, and then continued to break out. And last Friday, it was really broke out, really positive. And in the past, I talked about people that depend a lot on fundamental analysis, how they're kind of looking backwards, at least in this time frame. They would argue in general that they look forward, but because of the COVID event, it's distorting all the numbers, and so they can't help but look back because they're comparing everything to pre-COVID to this post-COVID environment. I don't think that's helpful for traders right now, at least short-term traders, which are the group that I'm talking about. But I just want to comment, since we're talking about the 513, the day the bears tried to tank the market. So the press and the fund managers have kind of almost a symbiotic relationship. The press is seeking ratings, so they don't try to get homeless people or people who have no experience with the market to come in the market. What they do is they try to get big names that people know. It helps them get them ratings. And the fund managers are on board with this because it gives them free press. It gives them a way to raise funds through media exposure. So it's a relationship that both of these guys kind of favor. Um, though I would say that I'm not sure. I mean, if you were like in this specific case, if your money was with Tepper, your interests are aligned with his. But if you're just simply watching TV and you don't have a business relationship with his fund, I would say your interests are not necessarily aligned. So and in this case, his projection did not seem to pan out. And I don't know that he would call it a projection, but it was more like he would probably say it was a very cautionary thing. But the implication, even though he may not have said sell signal, the implication was clear. Stocks were too high from his standpoint. However, fund managers also have a weakness. It's their version of kryptonite, and that is they fear, like a nightmare, they fear missing a major run up. So at some point, these fund managers, and some are in the market, but as time goes on, uh, the ones that are not may very well be drug in. And in those types of situations, when buyers exceed sellers, which is the technical viewpoint of markets, what causes markets to move, then we'll probably see some of those fund managers actually drive prices up. because fund managers, many of them have kind of restrictions about owning a certain percentage of stocks. So when they go defensive, they don't just sell their stocks. They trade them out into more defensive stocks. But when the market starts to run, then of course they want to get into more high volatility stocks. They can enjoy the run and protect their track record. So just wanted to make a comment. The fund managers enjoy a lot of advantages. They have teams of computer scientists and to help them. Uh, so you as a trader probably don't have a team of scientists to help you. What I would suggest is look for independent research, and such as what I'm offering here. I feel like is a good weapon to add to your arsenal. Now, I don't know your specific situations. I can't give you investment advice. I don't know the suitability of investments for you, but I'm kind of gearing this for looking at short-term trading, and I'm using this, or I'm the reason I'm able to do this is intellectually is I take the relatively new field of nonlinear analysis, and it's not. I don't feel like it's fully as well understood among the computer science field. So I think there's still room for us to make projections and not have the other side know exactly what we're thinking or what we're doing. Whereas things like trend lines, everyone can draw a trend line. The information is out there for everyone. But the field of nonlinear analysis and chaos, I think these are fields that is not as well understood. So I think we still have, or at least we can still have an edge on that as we make our trades. Um, Normally, I like to put a quote up, and this is no exception. Let me draw your attention to the top here, the green arrow or the green circle. This is a quote from the movie where Master Sergeant Bilko says, "I like a sporting event in which I know the outcome beforehand. It's more organized." So that's what we're trying to do here. We're trying to look into the future with nonlinear analysis and help you understand what's going to happen in the future so you can plan accordingly, at least in the short-term trading future. All right. Well, thank you for watching my video. Please like it if you like it. Please subscribe. Thank you for watching Conquer the Mummy. Bye.